In this video, I will do the technical analysis of Dow Jones Industrial Average Index for the week commencing from January 31st, 2022. This technical analysis will be in two parts. First, I will do it on the weekly chart and then I will do it on the daily chart. So this way we will be able to get the most accurate results here. Okay guys, so we are here on the weekly chart. This is the weekly chart. Weekly chart means one candle represents 1 week. One candle means 1 week, not 1 day, 1 hour. One candle means 1 week. Okay, now see, you can clearly see this is what I told you last week, that there is going to be a rebound in the market. Okay, and if the market goes down, then certainly, okay, it will rebound. It will rebound. So whatever happens in the market will certainly rebound, and this is what you can see here. Okay. Anyways, so let's do the technical analysis first. Okay, so the technical analysis, if you see that this is the lower band of the Bollinger Band, this is the median of the Bollinger Band. Market has closed between the lower band and the median of the Bollinger Band, which means market is clearly bearish. Then comes the moving averages. Okay, market has closed on two consecutive times, okay, below all of these moving averages, which means market is bearish. But again, the same problem, that there is a clear fan out in the moving averages, and this kind of fan out is it means this kind of fan out in the moving averages, it always supports bull. Okay, then comes the Ichimoku. Market entered into Ichimoku on the weekly chart and then retraced from the Ichimoku, and now it has closed above Ichimoku, which means market is bullish. So only through Ichimoku market is bullish. Now let's look into some other technical indicators. So if you see here, we have the MACD. Okay, MACD is clearly bearish. Okay, and the MACD is almost half of, okay, the signal. MACD is 240 and the signal is 420. Okay, now what it means is, the MACD is moving average convergence divergence, which means that the divergence in the closing of the price through the moving averages. So if you see that there is some, some heavy divergence in the price, but still, okay, it is bearish. Now whenever there is, some heavy divergence in the price, that always says that now the market will try to correct itself, means it will try to minimize that particular divergence. So it will be more clear on the daily chart. Now comes the stock RSI. Stock RSI is clearly bearish. Okay, then comes the divergence. So divergence in the price of these, candles, if you see, the divergence is normal, it is almost 50. So 50 never creates a problem for the market. Now the momentum is 30. Okay, means it is building up in favor of bears, but it is not still enough, it is just 30. Okay, so through all of the technical indicators except the Ichimoku, it is clear that market is bearish, except the Ichimoku. Okay, and partly through the moving averages. Now what is going to happen in the market, how the market is going to react, what will happen on Monday, Tuesday and all, so we will analyze that part on the daily chart. So let's move on to the daily chart. Okay guys, so we are here on the daily chart. This is the daily chart. Daily chart means one candle means 1 day, not 1 week, 1 hour. One candle represents 1 day. Okay, now on this daily chart, let me first write down the support and resistance levels first here. Okay, okay, so we have this resistance at 36110. So I've told you many times about this, the importance of 36110. Okay, 36110. Then another resistance at 35700. 35700. Then comes the next resistance at 35430. 35430. Then comes 35120. It is 35120. Then comes 34785 or 34800. It's a 34800 simple. 34800. Then comes 34535. 34535. Thereafter we have 34300. 34300. 300. Then we have 34050, 34050. So I have told you about this 34050. Okay, this particular level 34,050. Okay, again in my previous videos also, and this is what I'm telling you. I think from June or July 2021. Okay, many times 30, the importance of 34,050, 34050. Then we have 33790, 33 and 790, 33790. Okay, and then we have this one at 33580, 33580. We have then 33580. Thereafter it comes to the next one, the support at 33110. Now it is 33110. Then we have this support here at 32640, 32640. So there are these a lot of support and resistances. Okay, and market is not expected to move beyond the support and resistances. Okay, but still, okay, this is the important one here. Then comes this one, and then 34050. Okay, this one is very important here. Then 34,800 is again, very important here. Anyways, so let's first do the technical analysis. Okay, and then we will see like where the market is going to hit. Okay, when it retraces, and where it is going to form a lower high, and accordingly we will see. Okay, so the technical analysis, first comes the Bollinger Band. This is the lower band of the Bollinger Band. This is the median of the Bollinger Band. Market has closed between the lower band and the median of the Bollinger Band, which means market is clearly bearish through Bollinger Bands. Then comes the moving averages, clear fan out. This kind of fan out here on the daily chart is supporting bears. Okay, market has closed below all of these moving averages. Market is clearly bearish. Then comes the Ichimoku. Market has closed below Ichimoku, which means market is clearly bearish. Now comes some other technical indicators. MACD. Okay, so if you see MACD particularly on this day, okay, yep, on this day particularly. So the signal is negative 227, and the MACD is negative 449. Okay, means there is very heavy divergence in the price. Okay, with respect to the moving averages. See, the MACD is moving average convergence divergence, means there is very heavy divergence in the price. Okay, corresponding to the corresponding moving averages, which means that now in order to minimize that divergence, market is expected to retrace, and this is why you can see that market was trying to retrace, and on Friday market retraced. Okay, so further you can still expect market to retrace a bit, and thereafter it will means it may come down, not it will. Me see, there are some conditions, so I'm going to discuss those conditions. Okay, but as of now, see, through MACD, the pattern of the MACD clearly says that market is bearish. Yes, that's true, but again there is very heavy divergence, so market is going to cover that divergence first. Okay, then comes the stock RSI. Stock RSI is now getting bullish. Okay, earlier it was continuously bearish, but now it is getting bullish. Okay, but as of now still it is means the parameters are very low, so means it is still not supporting the bull movement until and unless the K channel is more than 50. Okay, it will not be able to support the bull movement here. Then comes the divergence. So divergence in the prices of the means the closing prices of the candles, if you see, it is normal, not a problem. Then comes the momentum. Okay, now the momentum is almost 92, which means the momentum is clearly supporting the bears, okay, 92 momentum is very heavy here. So until and unless you see that market is closing okay, means if there are 2 or 3 bull candles here, then only we can see that momentum is now coming down. Otherwise, as soon as or as far as momentum remains here, okay, market will not be able to form a bullish pattern. Okay, so as of now, see, as of now it is clear here that market is clearly bearish. Okay, this thing is clear that market is bearish, but that does not mean that market is going to come down. Okay, so there are some conditions market needs to fulfill. Those conditions, then only we can say that market will come down. Okay, now first of all, okay, this particular this is the 200 day 200-day moving average. So if you see that that market was somehow, for some reason, okay, surprisingly market was able to close above the 200-day moving average. That is a sign of, you know, short-term reversal in the market. Short term, okay, this short term could last 1 day, 2 day, 1 week, okay, or maybe, you know, 1.5 week or 2 weeks, that's it. So this is the bull candle. This candle closed above the 200-day moving average. Okay, so that's the good news for the market, means for the bulls. Okay, because bears were just dragging it down. Now comes, see, the market is going to retrace, that's for sure. Okay, it is confirmed market is going to retrace in the short term. Now where it is going to retrace, that's the real question. Okay, so that retrace, okay, it is going to this particular level, okay, 35120. This particular level is going to decide that retrace. Okay, see, and then these are the two supportive, you can say, or you can simply say that it is the zone, okay, from 34,800 to 35,430. Okay, so if you see market will retrace, this is confirmed. Now then comes the Ichimoku, and then comes the upper band. If for some reason, if market is able to breach this level, okay, and the Ichimoku, and closed above Ichimoku, means 2 consecutive days, not just one but 2 consecutive days, it has breached these levels and closed above Ichimoku for 2 consecutive days, for sure market will shoot up, and then market will regain its bullish momentum. Okay, now the chances, means as per the conditions prevailing in the market, okay, so these chances are very thin, but still it is the market, anything can happen in the market. Okay, nobody knows. So now so if you see that market struggles here, okay, around 35,120, if you see market is struggling around 35,120, and it is still below the Ichimoku, means market is failed to close above Ichimoku, which means market is going to come down. Okay, so this means that this particular level, okay, we are going to term it as lower high. Okay, and whenever you see a lower high is formed, you sell. Okay, means you short or you buy puts if you're trading in options. So these are the only two conditions, okay, that are applicable here. If you see that market has breached and closed above Ichimoku, it will shoot up. And if you see no, it is struggling, it is failing, and it has closed below Ichimoku, okay, below our levels, in that case it will come down, means it has already formed a lower high and now it is going to come down, as simple as that. Okay, and then these are the support and resistances. So guys, I have given the link to my Discord spreadsheet. Okay, so if you want to make those 30% returns, okay, quarterly, so you can that link of the Discord spreadsheet, this Google spreadsheet, it is there in the description of the video, so you can take a look. And also whenever you are ready to join the group, you can send me an email. Okay, and so guys, so this was my technical analysis for Dow Jones Industrial Average Index for the week commencing from January 31st, 2022.